Senator Joni Ernst's office from Iowa has reported that there's over 5,800 IRS contract employees who owe over $50 million in unpaid taxes.
It also appears by the looks of things that many employees are willfully evading taxes. It seems like they know the system well enough to know how much they can get away with, and they're doing it.
The IRS acknowledges this is happening. In fact, they even seem to have metrics on it because out of the 70 people who they claim are willfully evading taxes, they've only fired 20 of them. What do you think would happen if every American started evading taxes and less than a third of them had any consequence for doing so?
Well, John and Michelle, I am reminded of what Benjamin Franklin used to say, that the only two things that are for sure in life are death and taxes. And I guess that's true unless you're an IRS agent.
Yeah, I guess they only have to be concerned about death.
There's a difference between tax evasion and tax avoidance.
There sure is. In fact, as Louis Brandeis, a former Supreme Court justice, he wrote quite a piece about that, the difference between that. In fact, I want to take a moment just to read it so I don't miss any of his details. He says, I live in Alexandria, Virginia. Near the Supreme Court chamber is a toll bridge across the Potomac. When in a rush, I pay the $1 toll and get home early. However, I usually drive a free bridge outside the downtown section of the city and cross the Potomac on a free bridge. The bridge was placed outside the downtown section of Washington, D.C. area to serve a useful social service, getting drivers to drive the extra mile to help alleviate congestion during rush hour. If I went over the toll bridge and through the barrier without paying the toll, I would be committing tax evasion. If, however, I drove the extra mile and drive outside the city of Washington, D.C., I am using a legitimate, logical, and suitable method of tax avoidance, and I am performing a useful social service by doing so. For my tax evasion, I should be punished. For my tax avoidance, I should be commended. The tragedy of life today is that so few people know the free bridge even exists.
I've been hearing that story for almost 20 years, and I still love to hear that story. It's so true, and it gives us such a picture. You can understand how that it is a social service if you drive away out of traffic. Don't congest that downtown area and take a little longer so you don't have to pay the toll. But if you try to crash through, well, that's wrong. And there are things in place with taxes and tax law that allow you to have certain write-offs, allow you to have certain things that can cut down on your taxes. But to just come out and evade taxes, that's wrong.
It sure is. And, Louis Brandeis wasn't the only justice to talk about this. There was a former judge called Learned Hand. I think he was on one of the district courts. And in two separate cases, he showed that we are not required to pay the highest tax possible, that we are given the liberty under the laws to adjust our earnings in a way that we can expense a lot of those out. He says poor people do it, rich people do it, everybody does it, and it should be commended. Because
there's nothing wrong with arranging your affairs to pay as little tax as possible, I think were his words.
Yes, exactly. It's a shame that more people haven't been educated about how to properly avoid paying taxes that they legally have a right to avoid.
But you do have a lot of people that get excited about tax evasion in one way or another. And sometimes we hear that, the income tax is unconstitutional. You don't have to pay it, and there's this little loophole you can get around it by doing it this way. Well, it's really hard to fight the government from a jail cell. You don't want to go to jail for tax evasion.
And we've met people that have spent time in federal prison because of tax evasion.
They thought they could do something, and turns out they couldn't.
And the principle behind it, the principle might be, hey, maybe it is unconstitutional, but the problem is it's what our
It is the
system
law
is
of the
based
land.
on right now. And so we really can't fight that. Although people do try to come up with all kinds of even schemes. We hear about them all the time as people, come up with these ideas and then try to run them past us. Hey, if you want to try those schemes, you can, but we don't recommend it because, you could be evading taxes and be subject to penalty.
One of the schemes that we hear is that you can buy life insurance and avoid capital gains tax when you sell a piece of property. That's not true.
Yeah, I was going to say false.
Another one is that if you put all your stuff in a trust, then you don't pay taxes either.
Trusts pay the highest income tax rates. So I don't know how the reasoning works on that one. But some of the schemes we see, maybe it works this way because some of the schemes we see, they involve all these different entities, maybe trusts, maybe corporations, different types of companies, that they arrange everything. You have all these different entities, and I think that helps to confuse the matter because it appeals to people's sophistication. They want to be sophisticated about it, so they think that they have all these different entities set up. Even if they don't understand what all the entities are doing, they think they're getting something out of it. And then they might take intellectual property and put it over here in this company and then depreciate it out that helps offset the income over here in this company. The problem is if you're putting intellectual property and assigning an arbitrary value to it, it doesn't matter what company it's in, that's going to be the issue if the tax man ever comes after you.
It sounds like a very complicated way to be moving a lot of pieces and not necessarily gaining any ground. Kind of like a sleight of hand almost.
But it appeals to people's sophistication. So I think that's why those types of schemes are still around.
And the schemers make money on those things.
The schemers make money because they have to set up all the entities. And then by the time there's a problem with some way, then, it was a problem with the way the strategy was enacted. They already made their money off setting up the entities long ago and maintaining those entities, mind you, because each one of those entities has to file a tax return and you have certain maintenance that you have to keep up with on it. So there is a benefit to the promoters of these schemes.
As we're talking about this, I'm thinking about Jacob S. Herzig. He lived in the 1800s. He did...
In the 1900s.
1900s.
Early 1900s,
okay.
Yeah.
So he did some scheme and ended up in prison. He spent quite a few episodes during his life in prison. But he ended up, the Bible says a good name is rather to be chosen than great riches. Well, he realized he didn't have a good name. And so he took on the name of one of his cellmates or prison mates, George Graham Rice. And this guy was considered the Jackal of Wall Street. And while he was in prison, he wrote a book. The name of the book was My Adventures with Your Money.
That's funny.
And really, that's a lot of what these schemers are coming up with. They could be writing these books, My Adventures with Your Money.
Yes.
And we laugh about it because it's kind of funny in some ways, unless, of course, it was your money.
I know we've run across people that are paying thousands of dollars a year to have these schemers juggle their money from one corporation to another, and this business to that business, and this trust to that trust, and this endowment. And when you look at what it would cost to set those entities up yourself and to manage it yourself, it's just a few $100s. But these schemers are making thousands of dollars doing this. And it's just kind of almost like they're, by doing all this, they act like they're busy doing something for their quote unquote client, but in actuality, they're just ripping them off.
Behind every scheme, every scheme appears more logical, more above board if there's an element of truth in it. And so there is an element of truth in these things because sometimes it does make sense to have an extra entity. Something we'll often see that's a legitimate entity setup is somebody has their operating company. And then maybe they set up a separate company that is going to own the equipment that is used by the operating company and leases that equipment to the operating company. Well, now what you've just done is you've moved the equipment out of the operating company that might be more likely to be sued, and you've put it over here in a separate company that leases the equipment back to the main operating company. You've just done an asset protection strategy there.
And I think
that's a legitimate strategy.
I think as you
not going to save you money on taxes.
Yeah, and I think as you explain that, John, that people can understand, oh, yes, that makes sense. Operating company and an equipment owning company. We can see the connection. We can see the purpose. And when we can make those connections in our mind very clearly, then we can understand, hey, that sounds legitimate.
Yes. And sometimes it makes sense to shift income to another state if you can do that. So maybe somebody has an entity set up for that. I know that this was an older strategy, but we had an entity set up that was a C corporation at the time that could take money out of our company that was based in Oregon. So we could pay consulting to that company, and that helped to avoid Oregon state income taxes. It didn't necessarily help on the federal level, but it helped with state level income taxes. So there can be some strategy on that level.
And that's a good point, because that law has changed now. And that would no longer benefit us, even if we'd still lived in Oregon and had this separate entity in a state that doesn't have state taxes. But it's important to work with somebody that understands the tax law, that is not just scheming you, that will go with you before the IRS if you're ever called to defend what you've done. And that often isn't the case for the people that are charging you a fortune to do it, because these entities aren't difficult to set up, and they shouldn't be charging you thousands of dollars every year just to monitor them and make sure all the paperwork's filed right.
All right, I'm going to change subjects a little bit here. This is podcast episode 500. Since we do the Wealth Talks podcasts weekly, that means that we have been doing podcasts for about 9.5 years. So think of a senior in high school right now. We started doing the podcast when they were in second grade. Our youngest, Jordan, just turned 18 recently. We have been doing podcasts more than half of his life.
And we love hearing the reviews that y'all leave. Thank you for doing that. Your reviews help other people to find the show. A few of the reviews that we've received say, I wish I'd found this podcast sooner in life. The advice exposes many financial scams, is excellent, teaching basic financial principles that are applicable immediately. Another guy says, been listening to it since 2016. Never missed an episode. These people won't steer you wrong if you know the worth of your money. Another one says, I've been listening to Wealth Talks episodes for many years. The information is on point and practical. Thank you for sharing these reviews.
I just talked to a fellow the other day that said, I've been listening to your podcast for over 6 years. We should have called you a long time ago.
Over these 500 podcasts, we've talked about wealth building, infinite banking, budgeting, health. We've done interviews with George Gilder, who wrote Life After Google, Krish Donham, Rick Green. We've done a lot of interviews. We've covered a lot of topics, but we also like your suggestions. So if you have something that you'd like to hear us discuss, put it in the comments. Those requested episodes tend to be the ones that are the most listened to. So we'd love to have your input.
We have covered a lot of subjects on this podcast over the years, but we've never covered the topic we're going to talk about next week. You'll get to hear what that subject is at the end of this show. But right now, we're going to break.
After the break, we're going to talk about how to pay as little taxes as possible and 2 different ways of paying taxes, so hopefully it sets you back as little as possible. We'll be right back.
The policy that works best for the infinite banking concept is a dividend-paying whole life insurance policy with a paid-up additions rider. You'll want this policy to be structured to allow the maximum cash value accumulation without creating unnecessary tax consequences or inhibiting the cash value growth for future policy years. At McPhee Insurance, we specialize in these types of policies. We are licensed in all 50 states, so no matter where you're located in the U.S., we can help you. Call our office at 702-660-7000 or email us, team@mcpheeinsurance.com.
When you understand, like Justice Leonard Hand understood, that taxes are not voluntary contributions, but enforced extractions from your income, you start looking at things a little bit different. And when we started doing the infinite banking concept, we realized that if we would put the money that we had to save up for paying our taxes in a life insurance policy, and then when our taxes were due, take a policy loan to pay those taxes, we didn't lose the compounding growth on that money.
People pay taxes different ways. An employee is used to paying taxes by just having the money taken out of their paycheck every month or every 2 weeks sometimes. And then at the end of the year, when their tax return is filed, probably the following year, they're going to get a tax refund.
They hope.
They overpaid.
If they overpaid, yes.
And a lot of people do if they're just doing payroll withholding. But then you have business owners. Now, business owners get some nice tax cuts along the way. They get tax deductions that aren't available to people that do not have a business. They're able to expense certain things out because the IRS recognizes there's a cost to doing business. And so they're going to allow you to take deductions for some of the expenses that contribute to that cost of doing business.
Well, John, I want to touch on something you said, that they're looking for a refund when they, do file their tax return. But what that means, even if someone's an employee, and that means they overpaid their taxes. That means they gave the IRS a free loan for however many months they overpaid those taxes. So looking for a refund isn't always the best way to plan for your future.
No, in fact, business owners have a little bit harder of time estimating their taxes because of these deductions and other expenses that they may have throughout the year. They may not know exactly how to estimate their taxes for the coming year. So sometimes for business owners, it's easier for them to get behind on paying their taxes. And people that have been behind on paying their taxes before, maybe they went on a payment plan to the IRS, maybe it was a big deal to overcome that. But the problem is once they overcome, they pay off that debt, then they tend to overpay their taxes and get a sizable refund. I've seen it happen multiple times where people used to be in debt to the IRS or had years where they had to come up with a lot of money, and now they've overreacted and they're paying way too much to the IRS and then getting big refunds every year.
Again,
that's not a productive use of money. The IRS is not paying you interest for your overpayment except for the time that they're late in getting it back to you.
So as a business owner, having your money in a life insurance policy that continues to compound and grow for you helps offset the interest that the IRS is going to charge you if you miscalculated how much tax you're going to owe and maybe owe a little interest to the IRS. It helps offset that a little bit. So using the infinite banking concept to pay your taxes is a great way to kind of even the scales out a little bit and avoid being penalized when you underestimate your tax obligations.
There's not necessarily a problem with underestimating throughout a given year, how much you have to pay as a business owner, and then you can catch it up before the April 15th deadline, as long as you have a pool of money that you can catch it up from. That's a great purpose for a policy loan.
Some people like to have different savings accounts that they'll put different expenditures they have. Sometimes they'll have an account for taxes and an account for insurance and an account for their payments they're going to make on their property, whether it's mortgage or rent. And they'll have all these different accounts where they put money so that they'll hopefully have enough money for whatever expense comes up. But when we can use a policy as a source to put the money, we don't necessarily have to have a bunch of different policies for that, but we can use a policy where we have access for the needs that come up. And maybe it's not for equipment. Maybe it is for taxes. We have access to those funds. And just because we have, with the accounts where they designate this is for equipment and this is for taxes, they don't feel like they can dip into one to help with the other. And also having an account that's set aside just for equipment kind of puts that thought in their mind they need equipment because they have money sitting there, whether they actually need the equipment or not. So having a policy where we can have that money accessible to us if we need it for equipment or for taxes, it's there for us to use. And if we don't need it for taxes, well, it's fine. It's still sitting there waiting for us to use whatever need we have.
Back in 1907, prior to Louis Brandeis becoming a Supreme Court justice, he was appointed by Woodrow Wilson to the Supreme Court. He was known as the people's attorney, the people's lawyer. And he was really upset that life insurance was really just made available to very wealthy people. And this really upset him because he saw that life insurance was such a great financial tool. He wanted to make it affordable and comfortable for people of all incomes and all levels of society to be able to purchase life insurance. And he actually started a life insurance company in Massachusetts that's still in existence today for the very purpose, and I want to read exactly what he said. He said he dedicated himself to creating an equitable system, and his vision was simple yet revolutionary for the time: to offer low-cost, reliable life insurance accessible to everyone, not just the wealthy. And because that's available and other companies imitated that, we have companies now across the United States that people can use regardless of their income, regardless of their economic status, that they can tie into this and they can use it just like we're talking about here.
This is really hitting home because just yesterday you were talking to a couple in their 30s and they knew what amount they could budget towards purchasing a whole life insurance policy, but neither one of them had life insurance. They're in their 30s. They have 4 young children. And when you told them how much they could pay towards term, they already had what they could do in their budget for whole life. And then when you told them how much term policy would be, they were shocked at how inexpensive it would be. And it fit the budget for both of them to get insurance on their lives. So now, not only have they got started with their whole life policy, which it's going to help them with paying taxes or purchases for the family, whatever it is, they also have each of their lives protected. So if something happens to them, the family is not left financially devastated.
What was really special about that case too, and this happens now and again, where the husband in that situation really wanted to have his life insured heavily because he didn't want his wife to have to go back to work and try to raise their young family and provide for them and pay the mortgage. And she wanted to make sure her life was insured so that he wasn't struggling finding daycare and what we're going to do with the kids, because she understood the value that she brought. And you've said this time and again, people that don't get insured don't value their own life. They don't value their own life enough because they don't realize all the things they do for other people in life.
Well, we can be thankful for people like Louis Brandeis who realized what a financial tool life insurance can be for people and wanted to make it affordable for everybody, not just the wealthy.
Using a policy loan to finance taxes may not be the most exciting thing in the world, but it is effective. And when you think about what we're doing, we're getting the taxes paid. We're not paying them in advance to give the government a free loan. That's a good thing. And the other thing that we're doing is while our savings is accumulating and sitting around, whether it's to pay taxes or to buy equipment and other things, it's being productive. We're getting value from the policy that we're purchasing. We're maximizing the time that our money is sitting around. And those are the two things that we have to work with, is time and money in the economic sphere. And so we want to make sure that we're using both of those things wisely. By using the policy loan as a storehouse for our savings, it's a great place that we can draw from to pay the taxes, pay it back throughout the year. Then it's a great place that we can draw from to purchase equipment, pay it back throughout the year. It's a great place that we can draw from even to go on vacation or to purchase things, major personal purchases that we need throughout our lifetime. That's what makes it such a great vehicle, is the flexibility that it gives us. And of course, we have to have discipline to use that flexibility wisely, because too much flexibility, that's the definition of a credit card for you. And if people don't use that wisely, we see what that can lead to. So you want to use it wisely. Using a policy loan is no different than that. You do have a few more options, but it's a great storehouse for your money because it maximizes the time that your money is accumulating and sitting around.
My mentor, R. Nelson Nash, said everyone should be in 2 businesses: the business that you're in to make an income and the banking business. And to be in the banking business, you need to own whole life insurance. I've never met anybody that has voluntarily said, I want to pay more taxes. But I've met a lot of people that say, I want to make more money. And in our country, making more money is tied to income taxes. And so if you're not using whole life insurance to help offset the cost of those taxes, you're missing out.
Thankfully, we look to be headed in the direction of tax cuts, but don't sit back and wait for it to happen. And make sure you stay involved locally and nationally if you want to see better tax policy long term.
We want you to pay as little tax as possible without breaking the law or having to get a job with the IRS. Come back next week. We have a very interesting topic. Recently, Tucker Carlson did an interview with someone we have talked about on this podcast. That person is none other than Dave Ramsey himself. We are going to respond to the Tucker Carlson Dave Ramsey podcast right here next week on Wealth Talks.